I'm trying to make the squeeze happen right here, but I'm just not sure. How's it going, guys? I am excited to say that this is my second attempt at railing against the machine, right? We do have some important DD to cover, so I thought, I could just take the day off. I could just, what can I do? The internet's not working. The internet provider does not want me to stream. Either the hedgies are paying off AT&T or something like that. Who knows? Either way, what I'm going to say is that we are going to, one, not only cover the markets, but two, also look into non-AT&T providers for me in the future. How's it going, guys? Thank you so much for bearing with us this morning. There's so many people streaming right now, so I'm just like, man, it's kind of like being at a delicious fruit vendor market, right? Because you love these people that throw in their hats in the ring and be able to give you guys really good information. But I was like, nah, Andrew, people are wondering how the short squeeze buyback works. So I want to be able to provide you the DD that you guys are likely waiting for. And so let's at the very least give this a try, right? And AT&T instability, I remember from the past that it does not bode well. So that's why I was like, oh, I have a bunch of videos I needed to release anyway. I could just make those instead. But let's start here, right? Let's start with the short squeeze buyback and then move our way up. We see that GameStop is already moving itself over to 171. This is what happened during the after hours and pre-market, and it's likely going to be what is going to continue to happen right for the rest of the day. Right? If we can get it back up above 171, then GME is going to be in very good shape for the rest of the day and then straight through the power hour. Right? So if you guys have not heard the news, we are going to be streaming the second part of this live stream. I guess now this is the second part, so the third part of this live stream over on the second channel. So I hope that you guys join us there. Throw some paper clips in the chat if you guys did not get a notification for me going live. Let's see. Yeah, Lord Weird says, weird timing, I just updated the YouTube app and you went offline. Ooh, what can we do when the algorithm does not likey? Well, let's just give it a try, right? What can we do when the algorithm is like, yeah, it's right now the internet is full. That's why I don't start streaming at like, what is it right now? An hour after market opened. That's why I don't want to start streaming right there. But likely I got shadow banned. Yeah, I know, likely. But for those of you that are currently watching, let's try and get this going here. So maybe this will just be this video here. Boom, guys, you're probably wondering exactly the same question that I am. Moon Platoon, how does the short squeeze buyback work? Well, let's try and cover it with me, Andrew Mo Money, and Professor Meatball together with us. Now, where's Professor Meatball? Let's wait until he comes here. And while we wait, the only thing that I ask of you while we go through this video from the user, the ceiling is _ the roof. Give them a big upvote there, is to smash that like button because it does help this video go to more apes out there. So without further ado, let's cover how the short squeeze buyback works. Prepare yourself. They've seen a lot of discussion happening over how all these hedgies are going to be able to buy back all the shares they have shorted. So let's break this down to simple terms if we can. Explain like I'm ape. Now that's what I like to hear. Please interject any criticism you might have of this explanation. Do check out the description down below where you will be able to give them their criticism or drop them directly in the comment section in this video. So first, it is important to realize that once the hedge funds are margin called, they are no longer in control of the situation. All buyback is handed over to the clearing houses that handle balancing the books to cover all their losses. We've explained this before as like the scene in the evil person has in Robot Army, and then the Robot Army turns their guns and says it is now time for a margin call and turns them over to point at the bad guy instead. Right? This is essentially how the high frequency trading algorithms are going to be turned up against the hedge funds in the event of a margin call. It's just going to be business, baby, nothing personnel. Seriously, this is the truth, Ruth. If you guys are wondering, look in the description for the second channel. So let's break down as a formula, right? I'm not going to assume any SI percent or use real numbers. So we are going to help you do math without true math without scaring you away. So the hedge funds that are short will have to buy back all the shorted stocks they have done until the correct amount of shares in the circulation are actually on the market. A, the amount of shares that are currently in circulation held by institutions, insiders, and retail, and all other entities along with shorted stocks, including the naked shorted shares, subtracted by B, the number of shares that should be in existence equals C, the number of shares that will have to be bought back to rectify the number to what it should be. Time for handy dandy Mr. Whiteboard to explain the full situation here. Do you have a blue marker? Where's that blue marker? So what Mr. Whiteboard will be able to show us is a better understanding of what we just saw. We have A minus B equals C, which is the total number of shares held by both institutions, insiders, and retailers, all of the shares possible, minus the number of shares that are that should be in existence. Right. So this is the number of shares that is actually issued by the company. So this includes all of the naked shorts. Equals the number of shares that need to be bought back to rectify the number to what it should be. So right now we have this pie chart. God forbid, I'm sorry, we do have to use this pie chart here, and we have a portion of C, the pie chart, that is actually just B. So B is the tiny portion that is issued shares, right? So this is the part of the pie that is actually shares that are supposed to be in existence. We know that there is a large proportion, over 100%, that's why B is so much smaller in proportion to the rest of the pie chart, that is actually a, hold on, this is A. So this is C, all of the shares that shouldn't be in existence, so the naked shares. This is going to be the share buyback right here. The hedge funds will have to purchase on an amount of C shares to clear their debt, and their clearinghouse will have to do that for them. They're not allowed to do anything crafty and turn one purchase share into purchasing 10. They have to purchase 1-to-1 what they owe, and that's the share buyback itself. That is the process of the margin squeeze. A key to business is that at every buyer, there needs to be a seller. They need to buy back what is on the market for sale. If there are none, as if everyone is hodling, then they're going to have to continue raising the price until there are some put up, right? Basically, you go down the street and say, anybody want to buy anybody want to sell their GME? Everyone just closes their door. Okay, I'm offering it for, whatever market price is, 169, then 200, then 250, then 300. If everyone continues to hold tight past the infinite squeeze, right? Which is not likely. Think about human behavior. But at the very least, humans all have different price points. And right now, if we all collectively raise our price points higher and try to sell after the top of the peak, then we will all be wealthier for that. Imagine if everybody turns away and says, I'm waiting for the top of the peak, right? I'm waiting until it comes back down. Then only the most greedy people are going to be able to benefit. That's okay. Right? The people that end up selling at like $1,000, they'll hurt the squeeze. But then when it goes to $10,000, those weren't the most greedy people. The most greedy people were the people that are willing to have the highest number of their amount, but still trying to sell on the way up, right? And then likely the most greedy people, the ones that have like $1 billion, $1 trillion as their price tags, are never going to get there. So that is the current mental gymnastics that we have to try and leap through. Sayan Islam says, when do you think they have to buy back all the shares? I know you don't like giving dates, but a rough estimate. So we do have 801, which is the process of forcibly shutting down and creating this margin call that is giving us the opportunity, and I'm talking about NSCC 801, that is supposed to give us the opportunity to see this margin call go into fruition, even if they still have money. It's just that they're being too risky. So in that case, this is that's the rub right there. We are waiting for the DTC to step in as the one major catalyst for us, because we can wait forever. But what we also could do is wait for a member of a cartel of money makers, money holders, right? The DTC to come in and say, I'm tired of all these risky uncles in my family. Get out. The Godfather does not bless you anymore, and all the other tropes that we are expecting from this essentially group of rich people that all of their activities border on the criminal. Good morning, says Seb and the real gig. Aw, thank you guys. Let's get to 5K likes and 100K subs. Thank you, real gig. I'm going to cover those supers in just a second. So a key to business is that for every buyer, there needs to be a seller. Remember that, guys. You are going to be a seller in the market where nobody is selling on the way up. That's the buy and hold strategy. And now that we're talking about strategies, we're talking about them in terms of education, right? Where did my disclaimer go? I am not a financial advisor. Let me bring this over from my large face. And now, there we go. Perfect. Let's just put that there. Okay. If retail investors, I'm not going to assume the amount of the retail currently owns, do own more than the float and collectively choose not to sell to the hedge funds, does this mean that retail sets the price? We've often talked about retail owning more than the float exists, right? So we have A and B and C. B is the number of shares that should exist, right? And so likely what is happening here is that a portion of B is owned by institutions. So we are making this delineation here. Actually, I wish I had a different color marker. So I'm going to make this like that pattern here. We have B, which is the number of shares that should exist, and we have the ownership of the retail here. So in essence, the float is a small piece of the shares that should exist. The rest of these shares are all naked. And with Austin Tobit, he thinks that that could be in the trillions. Right now, we are going to put this board down and not speculate about how many shares are actually failed to deliver and how many shares are actually naked. For now, all we need to know is there are shares that do not have anybody's permission to be borrowed because they are borrowed from thin air. And as of right now, we are trying to use this share buyback to be able to cause them to have to buy those shares. Okay, let's see. So the question is currently, does this mean that retail sets the price? Well, no, anyone saying that they have to buy back all the shares is not accurate. They have to purchase the amount of shares necessary to get back to the original amount. And that's the kicker there. The more shares held and not sold during this going up will make the price increase with less stops along the way. These are the levels of resistance that we're expecting to hit. We also have to account for the fact that the amount of shares held now will not be the same as during the mother of all short squeezes. People will be jumping on board as this is going up, including institutions. If they choose to sell their shares to get immediate tendies, this will count toward the balance of shares owed by the evil hedge funds. So does this mean that some gorilla will be bag holders? No, rest assured there are 3 steps that we need to make sure that you understand here. You will have an opportunity to get your tendies apes. Some key things to remember about this are as follows. 1, their continuous repurchasing of the stock will make this price go up continuously as well. The upward pressure on this thing will cause jumps in prices of which the stock market has never seen. Coerced purchasing, coerced buying is the most important piece of the pie, because we have not seen it yet in history. This amount, sheer volume of coerced buying. Number 2, if the SI is anywhere close to that of the DD mentioning, but we're not going to put any number on right now, then this is going to take a long time to unravel. This will be buying back shares multiple times over, recursive covering of these shares. This is not going to reconcile over a matter of hours. You will need to time to get to the moon that you choose. Full disclosure, they're putting an edit here to clear up any misunderstandings about the price drop. When the purchasing is done and they finally balance their books, and they still are going to take a while to come back down to earth. The price of the stock will hover for quite a while and will not plummet from, let's say, 10 million to 200 in seconds. Do not be afraid that you won't win this. You will get tendies as long as there is buying pressure, and you will be able to sell. Remember, though, that to sell your stock, your broker needs to have a buyer at a certain price. A seller always needs a buyer, as pointed out. So if there are no buyers, you might have to wait on option 4. What is that? Well, even with the purchase price currently, you will get tendies. This announcement of what they're going to do at annual shareholders meeting is excellent news. Ryan Cohen is going to be the chair of the board of directors now. That is the CEO's boss. So it will be unstoppable, especially with the support of newly minted millionaire gorillas, gorillionaires, if you will. The fact that they are paying top level people by profit, the company makes them give incentive and motivation to kick this into overdrive. We covered that this morning's live stream as well. So do your apes. Keep hodling, keep the faith, prepare for the mother of all short squeezes that is going to take place. Prepare an exit plan, prepare for life-changing money, prepare and prepare. So I hope that made enough sense to you about the proportions of what we're trying to achieve, right? And how exactly mechanically is that share buyback going to happen. All shorts must cover. And we are looking at the mother of all short squeezes coming in soon with our DTC catalyst, of which OCC 801 was just passed earlier this week. But enough about that. Please leave some comments down below if you have any questions about exactly what we covered earlier on this this informative video. Make sure to give that source some love. And finally, also, just as a small reminder, make sure that you understand that you are great. Thank you for being you. I want to also thank the people that make this show possible by pressing the join button down below next to the subscribe button, or heading over to Patreon and supporting me there. And we will see you in the money. Peace. Seb says, good morning, apes. Hope everyone has their coffee ready. Andrew, can I get your thoughts on DS Drive Shack? I gotcha. So Drive Shack, you are going to be analyzed, and then we're going to cover something that someone just sent me, the possible massive securities fraud. Ooh, that's going to be good. Possible massive securities fraud. So that's going to be coming up soon. But for now, let's do Drive Shack. The Real Gig, 5K likes and 100K subs. Thank you, Real Gig. Greetings from Taha. I really need to see, I need to meet the real apes that have been supporting the show for the longest time. If it means having to drive all the way, if it means going all the way down to the Netherlands, then so be it. That's very cool. Rod M says, GME has a 216 million bond. Do we know if these bonds can be converted to stock? If the bonds are convertible, do we know what the conversion rate is? We heard Austin say that there are no convertible bonds yet as of GME, as of this morning, like 50 to an hour and a half ago, 50 minutes to an hour and a half ago, but I will check in on him with this question. Actually, you know what? I'm just gonna straight up ask him. Rod M, we're gonna see if Austin has any brand new research. Word historian, thank you for joining the Moon Platoon. I appreciate that. You are helping out the show, and now you are an officer of that very same Moon Platoon. Congratulations. Let's see. Let's give this over to Austin. No rush. Okay. I'm actually going to put that stonk here. So Drive Shack. Oh, okay, fine. This can be this, and this can be Drive Shack. DS is a very good name because that's data science. Drive Shack. Okay, let's see if there's a news first. No, not much except from 2 days ago. We are going to do a little bit of the momentum analysis. Oh, the Real Gig. Thank you for joining the Moon Platoon. Oh, Taha. Thank you so much, man. Once again, I really do have to go to the Netherlands. I had a great time in Amsterdam, even though that was only like 3 days. Oh, I missed traveling. I need to get my vaccine soon. Drop some scissors in the chat if you're already vaccinated. Lucky dogs. I want to travel. So this level of resistance is actually not very strong, even though it is the brand new roof for the day. So if you're looking into reward risk, this is an important point to note. Also past this level here, that is the support that we saw back in early March. So as of right now, these two are the support and resistance to be able to keep track for Drive Shack. But unfortunately, this always places the price momentum right between the risk and reward directly before and after. I mean, that is just how that is just normally how a stock lives in equilibrium, right? In every action has an equal and opposite reaction. The reason why it's dipping and staying here is because it's wondering if it's going to be supported by this slightly weaker support right here at $3.33. That's a cool number. So if you do see a strong bounce here, that would be an excellent entry point for Drive Shack. Fubo stock. You sure you got it? Let's take a look at that Fubo. Fubo. Fubo is 17% ripping to the skies. Is there a catalyst here? 2 hours. Stocks relatively flat after S&P 500 record high. Whoa. Is it the time to buy stock in Fubo? Fubo TV stock pops on exclusive rights deal. That's what it is. Oh, the Qatar World Cup? Uh-oh. So Fubo TV is doing a deal with the Qatar World Cup as acquired exclusive streaming rights. Okay, so that's the news catalyst. In that sense, this is not just a random event. This is a coordinated Fubo attack, right? Just a couple of hours ago, it was reported that Fubo does have those exclusive rights, so that's why we are seeing these 2 green candles. Unfortunately, news catalyst can only bring you so far, so it depends on how much weight you put into that news catalyst. Personally, for me, I thought that we weren't going to see organized sports again on the worldwide level for a long time, especially in Qatar. So for now, I would imagine that you are going to have to come back down to earth eventually. What's up, Jonathan Baldwin? Welcome back. Akatsuki says they just got a call from a police officer stating that they're being investigated for a crime. What the heck? Stay safe. Unless you're a criminal, in which case, I'm no snitch though. I am no snitch. Alright, so don't give up, promote AMC too. You got it. So AMC, you're going back to your slot, and we're gonna cover possible massive securities fraud here. So possible massive securities fraud. They're getting this post out for visibility first because they report what they have found to the SEC and possibly the FBI. It's a very short post, so let's give a quick look here. Thesis. They believe the DTC has been actively orchestrating the planned failure of the NSCC, but they believe that the participants of said entities know about this because information would be published to them based on the recovery and wind down plans that were recently updated. Not only do they believe that participants know about this, but they believe that they have been set up global shell companies to avoid being liquidated in the event that the recovery corridor is unsuccessful. There are multiple filings of very large global securities purchases on the DTCC website available only to participants with one thing in common. They are non-transferable to persons or entities in the US. Look for yourself at the data from the DTCC for the underwritings with restrictions on the subject. Okay, so this is the DTCC turning on the NSCC. That would be the first time that I have heard about this. However, the last part can't happen if that money is tied up in, say, shell companies in the Cayman Islands with restrictions that don't allow transfer of those assets to entities in the US. Okay, so this is bordering on, can we actually prove anything beyond speculative criminal activities? Let's say thank you to, I think Harag was the one that sent it. Harad is the one that sent that to me. So thank you, Harad, for sending that. But as of right now, it is something incoming. It is something that we're going to have to take with a massive pillar of salt. However, securities fraud is something that is going to be a big piece of our 6 bullet points that we have talked about with Austin. All right, speaking of crimes, the crimes of Citadel. That sounds like the next chapter in this book. The crimes of Citadel. All of the pieces. So, let's see, this too long didn't read. Crimes of Citadel. It's a pretty good story, actually. Did you know that you and Warden Elite got disconnected at the same time? I read that comment. I think it must be a coincidence because we don't live anywhere near each other. I think he's on the west. I think he's on the East Coast. Should be a coincidence, but who knows? Ooh, it's probably a coincidence. Oh man. So, to London and Reed, Citadel has been perpetuating a crime, illegally counterfeiting shares into the marketplace in order to profit. They are selling shares they don't have and don't intend to deliver. Citadel has been using their designation as a market maker to cover their activities as well as continue to counterfeit shares. This poses an increasing risk to their own business and more so the overall market. So this looks like a pretty good overall collection of the crimes of Citadel. What I'm going to do is I'm going to go over to my video with Austin and the congressman. And what I'm going to do is I'm going to take a screenshot of that video with me holding up the whiteboard. And then I'm going to use that as a screen cap for this video. Is there any frame where I'm not making a stupid face? So that's the congressman paying attention. Boom. All right, let's get this bread. If you guys are curious about what happened earlier today, the internets were disrupted by whatever like construction or fixing of wirings that they're doing here in the Bay Area. So it's likely not me. A couple people might have not had their morning like news or NPR or something like that. But it does affect me. So it hasn't yet bothered us, and we have already 30 minutes into this new live stream. We are going to be bringing on Chris. So let me see if Chris responded. He did. Chris, can you stream at noon today? EST. I am going to change it up. I have a brand new thumbnail coming out. It's going to be cool. Okay, here we go. Hey guys, thank you so much for... Oh wait, no, actually I want to get rid of this first. I want to get rid of this frame here. Hey guys, if you had not yet seen the video of us talking to a real congressman and telling us the woes that Congress will face if they heard the warning that we have something slightly more devastating than the 2008 financial crisis. If they heard that and they chose to do nothing, this would be a grave error. And this is now even more well documented in this video here. The theory, all the pieces, like the anatomy of the crime of Citadel. Give this source by Swede Child of Mine a upvote. It's going to be in the description down below. And make sure that you are paying attention to the stock market with us each morning, bell to bell. I'm excited to have you here, and we are going to go straight in. So one of the first things that we do try to deliver is the upfront right away. So this is not that long of a document, so make sure that you do stick to the very end and continue to support the channel by bringing this video to 1,200 likes at least, and then this channel to 100,000 subscribers, both of which are very helpful to the growth of this story. Citadel has been perpetrating a crime, illegally counterfeiting shares into the marketplace in order to profit. They are selling shares they don't have and never intended to deliver. Citadel has been using their designation as a market maker to cover their activities as well as continue to counterfeit shares. This poses an increasing risk to their own business, but more so to the overall market. And if you have heard of Austin Tobit's, look at this, they even refer to a Tobit's. Citadel has no clothes. They are posing a risk to the global economy. So let us see a catalog of the crimes of Citadel. This post is the collective narrative behind the play on GME by large institutions. There will be a multi-part DD post gathered from excellent insights on this sub. As there have been no confessions of these activities by the perpetrators, a la Bernie Madoff, or books that haven't yet to be written, this will only exist as a theory with pieces of evidence to support where we can. Neither sweet child of mine nor I are financial or legal advisors, so this is for entertainment purposes only. This will only exist as a theory with pieces of evidence to support what we can. It's designed to be high level, approachable, and supported by available sources where possible. Represent key players and interests as it relates to the events surrounding GME. It's incomplete. Where information cannot be confirmed, it will be marked as a rumor or speculation and should be treated as such. But it should not be a rabbit hole. It will be ongoing, will require updating as well as contributions from you outlined below. So this is square brackets, open close is request for link to relevant DD. This is expert insight requested, and this is further research requested. Wow, this is already getting some footnotes here. Very cool. Part 1, the crime of Citadel. GME, the current price of GameStop stock is artificial. Bold move right out of the gate. First sentence. The first sentence is the stock price is being manipulated. In simpler terms, the price of GME is not determined by normal market dynamics, supply and demand. This is because Citadel and others have been illegally manufacturing fraudulent shares of GME, abusing their special designation as market maker to profit from their firms. Oh, Real Gig wants me to go to Amsterdam again. Special thanks to Lord Weird and Mighty Brows, guys. Give those mods some scissors in the chat. Seriously, they do so much for us. The more straightforward term for their activity is share counterfeiting, okay? So we've already talked about counterfeit shorts, also known as naked shorts, right? Naked makes it sound like a fun little like, oh, what could this economic term mean? Counterfeit makes it a little bit clearer. Citadel and others have been counterfeiting shares of GME, profiting from non-existent shares, dumping fraudulent stock to lower their price, and abusing system lapses to hide their activities. Their scheme that has grown wildly out of hand and now threatens to wipe out many more firms in the market due to their risky behaviors. So, Congress people, if you're listening up here, this is the sentence, right? This is the paragraph. It's clear as day, very, very compelling, and I appreciate this this conciseness right out of the gate. Let's see, the overall mechanics of this scheme. An FTD, failure to deliver, a key term to understand. An FTD is a standardized term for a delay in delivering a share that's been purchased. In the context of Citadel, an FTD represents a counterfeit share. In the US market, a share can be sold regardless of whether or not it actually exists. The financial system accepts the transaction at face value so that the buyer can continue trading. The delay in delivering a share is meant to be temporary, right? But for Citadel's case, they never had the share they sold. They abused their position to sell something they didn't have. Let's bring out Mr. Whiteboard. We have talked about naked shorting for so long, but it never hurts to cover it once more for the very simple and very perhaps the smooth brains out there as well. Here is that marker. Let's say that you have a stock and you would like to sell it. Well, that's okay. Let's say this is G for GME. You would like to sell it. That's no problem. You can exchange it for cash anytime you want. Let's say that I want cash, but I don't have a stock. Well, I can borrow it. That's why I'm going to do some dotted lines. And then borrowing the stock, selling it now, and then promising to give it back to you later, that is a short. This is a regular short, a covered short. Now let's assume that there is no stock, but I still want to sell it anyway. This G exists in a dotted box, and I can also borrow it to give it back later. But who am I borrowing it from? I'm not borrowing it from anyone. This is the different ways to be able to sell that stock. Now, the only way to be able to have this side of the arrow come back and exchange it for the stock again is for me to go out to the market and actually buy this stock or locate it some other way. I can even give someone else's stock back as long as I give the stock back to the person that I borrowed it from. Now, this way, since the stock never did exist, it needs either to be same thing, right? Locate someone to borrow it from by covering it, or by going out and buying the stock at market value. So that is currently the two ways to be able to sell a stock. Have the stock or don't have the stock. Either way, you can borrow it from a real person or borrow it from the ether. This is supposed to be able to help us with asynchronous transactions, right? Sometimes the company that exists for the stock wants to be able to sell shares that don't exist. That's okay. It's meant to be an IOU. It's meant to be like a, hey, you want money right now, right? You want to be able to borrow it and give it back to me later, even though there's no one to borrow it from. That's okay. And that's the way that our economy in the Americas will work right now. I say the Americas, but really I'm talking about one America in particular. Outright share counterfeiting is highly illegal and one of the financial crimes that carries prison sentences. Check out how long a prison sentence using this link in the description. For Citadel to perpetrate this crime, they will need to hide it among their transactions to appear legitimate. FTDs can be legitimate and their enforcement is subjective. Will depend on the facts and circumstances of the particular activity. You guys are probably aware that there are a lot of gray zones in the economic world, right? You can build a monopoly. However, it's your intent. Did you mean to make this monopoly to make the lives of your consumers easier and the products cheaper and easier convenience? Or did you mean to buy out the competition so that no one can ever compete with you? So these are the questions of why FTDs are even possible and why are they sometimes perfectly legal. Citadel scheme part 1. Create a share legitimately. Number 1, Citadel's activities are recognized as bona fide market making, an industry designation that allows them to special authorities and responsibilities. And with great power comes great manipulation. One of their special authorities is to create shares in the marketplace as part of their role of providing liquidity. So this is finance speak for keep the shelves full of stocks people want. Citadel is allowed to execute transactions without owning the share. In other words, market makers can temporarily create a share from nothing with the understanding that it is illegal to manufacture shares for their own profit. Essentially, they are the banker in monopoly. They go out and they say, hey, right now we ran out of paper money because the board only had so much. I'm just going to write a little, I'm just going to create a napkin and say that there's going to be paper money eventually. I'm the banker. I'm not supposed to make money off of this, so that's why I'm allowed. And now that you're allowed, you can already see where the gaps are starting to see. They're starting to come out of the woodwork here. This temporary created share is recorded as a short, designated to be sold on the marketplace, then bought back within a period of time to prevent an enduring non-existent share in the marketplace. Shorting is also a common practice of borrowing a share from someone else's account. The borrowed share is sold into the marketplace and ideally bought back at a lower price and returned to the account. Many financial companies do this legally, Citadel included. The difference here is that the very first one, they're not supposed to be able to use this for profit. It's supposed to be able to create the market dynamics in real time, even when sometimes there's not enough monopoly pieces out on the board. There's not enough greenhouses, that's fine. They'll create some out of napkins. There's not enough paper money, they'll create some. The main point is that they are not supposed to turn a profit. However, shorting normally is supposed to turn a profit in some way, right? It has great risk, almost near infinite risk, if you guys have been following the channel. But if you do it right, you could drive companies directly into the ground, such as the attempt to drive GameStop into the ground by Melvin and Citadel. Both traditional shorting and bona fide market maker shorting creates a legitimate non-existent share temporarily. Again, the non-existent share is meant to be a placeholder until a real share is delivered. If the share is out in the marketplace long enough without being repurchased, the share is flagged as an FTD, a failure to deliver. Since there was no actual share delivered, it is never, if it is never reconciled, it becomes counterfeit. There we go. Pretty simple, right? This is basically the steps it takes for a share to become counterfeit. Let me zoom in a little bit more and then go back into it. Citadel scheme part 2. It's only illegal if you get caught. The process of determining an FTD is technically complex. There are regulations for the amount of days which need to pass before a share is declared an FTD. Additionally, after a share is declared an FTD, there are additional times allowed for counterfeit shares to be rebought, with even more time allotted for market makers to do so. But once the allotted time passes and the delivery still failed, the party at fault is subject to enforcement measures. The enforcement measures are weak. Small fines levied far after the violation, generally for less than the profit made from the activities, and it is difficult to track. An individual shares may trade dozens or hundreds of times per day, but there is no way to follow the path or origin of each individual share. So the counterfeit share is logged against the overall pool of shares, not knowing, Hector with the coffee in the morning, heck yeah, not knowing which particular one is non-existent, but the contracts for the sale remains on the books of the parties involved. While the enforcement agencies are not interested in the small volumes of counterfeit shares or low-cost shares, Citadel has been manufacturing millions of fraudulent shares at hot prices of hundreds of dollars each, getting away with it under the guise of bona fide market maker activities, and have yet to be settled. So they are pretending to do their job as a banker, but slipping banknotes underneath so that they profit themselves. This is a oversimplification of that process, but in essence, they are using these naked shorts to hurt stocks that they have a vested interest in hurting. And that is the definition. Tarred stock. Thank you so much for joining as a Gorillionaire. That is going to land you a coveted spot in the end screen. Thank you so much. I really do appreciate it. You are now a general of the Mo Monkey Army. Meatball is proud to serve alongside you. So a company with a short position on their books will retain the debt of a counterfeit share for the duration it is on the market. So it is only illegal if you get caught. As of right now, I'm just banking. I'm just doing my job as a person that is allowed to be a bona fide market maker. However, this is now a conflict of interest. Citadel Scheme Part 3, take the money. Once the counterfeit share is sold, it becomes an FTD. There are several options of addressing an FTD. So how do you get rid of these sneaky FTDs? Buying a share in the marketplace is the primary way of closing out an FTD. This is also called covering your naked shorts, and they don't want to do that. That's the normal way of getting out of your short position. A second way to close an FTD is when the price of the stock goes to zero and the stock gets delisted. This voids all of that company's stock, including the fraudulent shares. The FTD problem simply goes away with all the other stock. That's the one they've been wanting to do since GameStop was hovering around $4, $2. Like, this is the original plan. They were so close, and then boom, 1,600% up so far, and that is just the beginning. For a party engaged in criminal act of counterfeiting shares, their main interest is avoiding the consequences of FTDs. The second way, killing the company and the stock with it. They intend to sell shares they have never have and never pay for them. That's the easiest way. Lots of money, tax-free. Paying for shares from the marketplace is undesirable to Citadel, not only because it increases costs, the cost of legitimacy, but also because the price of shares could go up and make the transaction a loss. Flooding the market with shares also has the added effect of dropping the price of the stock because the market is overwhelmed with supply, and we've talked about this before. When multiple people, let's bring up Mr. Whiteboard. Remember the two ways to short this stock? Well, the two ways to sell this stock. Either way, this allows more people to have the stock because you have money. And even though you don't own this stock, you are exchanging people's money and satisfying their desire. Imagine these are hamburgers, and there's only so many mouths to feed inside a KFC Taco Bell combo. And you are outside giving people Taco Bells and KFCs that don't exist. You're just borrowing them from thin air. Well, right now, you are filling bellies and decreasing that demand, which means supply runs rampant and the price of the stock drops. This is just simple supply and demand, but with an extra little flavor barbecue sauce of manipulation here. So if the price goes so low, the stock gets delisted, the debt of the shares on the seller's books becomes a write-off, which they will enjoy a tax benefit from. So bankrupting cop manies is the most desirable outcome from the share counterfeiters. The targeted company is an unfortunate casualty chosen for its ability to be shorted into bankruptcy. This is the first part of Citadel's scheme. Target a company. So in essence, this is very much like the Thanos where the GME goes off, Scarlet Witch, and says, "You took everything from me." And Thanos says, "I don't even know who you are." It didn't matter that it was GME or AMC. It just mattered that it was a vulnerable stock that, you know, maybe people wouldn't mind if it suddenly started to not exist anymore. The snapping is what they wanted to do. So Note that the short positions are not publicly disclosed, right? And they have no actual obligation to disclose them. And company's bankruptcy closes all positions, so tracing these activities to Citadel is extremely difficult. These activities can happen entirely behind closed doors and leave little evidence in the public marketplace. This is what the sub has been working with. Trace evidence of counterfeiting activities in the marketplace. So if you are skeptical, if you are a person that is like, I don't know if this is exactly what's happening, well, unfortunately, with the current regulations in place, there's no way. We have to build on speculation. So there's two ways to do this, Citadel. You can either stop lobbying and supporting politicians who oppose transparency and shorting data specifically, or just show us your short return, right? If you don't want a regulation to tell you and force you to do it, just show us how many shorts you got. What are you afraid of? You afraid? So fourth part of the scheme, they took the money and they're going to run. Profitably closing an FTD either via bankruptcy or repurchase requires one thing: the price of the target stock to go down. In this case, the GME stock price went up during their scheme. This caused Citadel to find an alternate a way to close the FTD, so perhaps as a temporary stopgap or perhaps as a last resort, Citadel chose to perpetuate FTDs without closing them, and they would keep the FTDs ongoing as long as they could, never getting caught until circumstances let them exit their position, hiding until they escape. Since FTDs are reported by time, Citadel figured that they could reset the timer to avoid getting caught, very similar to floating credit card payments. They could do this in two ways. One, they could short the traditional way, borrow or acquire a batch of the shares from an exchange or dark pool, an off-exchange trading room, and then turn around and close their FTDs. Those new shorts would later become new FTDs, but they would give them a few days. Second, they could counterfeit additional shares. While it is uncertain if it was possible for Citadel to use counterfeit shares to close out FTDs, they're releasing more counterfeited shares into the marketplace. Let them easily borrow or buy the shares back and then turn around and close the FTDs again. Again, shorting gives them a few more days until the counterfeit shares become FTDs. It is the exact same as using a credit card to max out another credit card. Maxing out this credit card to pay off another credit card is 100% the process of creating a naked share, and that covers a naked short that has already become a failure to deliver. Catherine, I'm going to cover General Electric in just a second. Citadel could reset FTDs like this continuously, never running into enforcement limits without being able to reset the FTD timer again. And that is painful. How could they continue to do this? Well, we've covered that DTC005 may finally allow one share to be borrowed once only. So now we have some data, brand new data, that is perhaps a regulation that is going to close them out. The time stone on the Infinity Gauntlet, let's say. This will also keep the marketplace full of shares, normally a desirable outcome, but in the interest of their counterfeiting scheme, keeping an abundant supply of shares in the marketplace also keeps the stock price low, the availability of additional borrows high, and the interest on the borrowed shares low. If Citadel was worried about availability, they could also reborrow the share they just sold, borrow from A and sell to C, and then borrow the same share from C, a process known as rehypothecation. Oh, and if you guys are wondering about the exclusive rehypothecation DD that Austin Tobit is going to do for this channel, specifically this channel, you don't want to miss it. I didn't say anything in the beginning of this video, did I, about subscribing? You definitely should consider it. We're on our way to 100,000, and we would love to have you on board. Citadel Scheme Part 5, we are at the final part, but at what cost? The cost of resetting the FTD timetable, kicking it down the road, is twofold. First, there's a daily interest paid on every shorted share Citadel has. The interest rate is decided by the lending organization and is related to the price and availability of the shares to be borrowed. So this is, as of right now, just straight up costing them money to continue fighting this fight. Does it cost you money? No realized gain or profit for buying and holding. Number two, for every short Citadel left open, the debt of that share remains on their books. As Citadel shorts more shares and the price of the shares went up, their overall debt increases. If the debt gets too large, Citadel could potentially be margin called. And that's the mixed squeeze, the margin call squeeze that we've been waiting for a long time. Their debtors would force Citadel to pay up. And this is the high frequency of trading robots turning against the hedge funds and basically saying, sorry, executing Order 66, there's nothing else we can do but liquidate everything. that you have. It is unknown when or how large their debt must be before Citadel gets margin called. Additionally, due to Citadel's activities, it is difficult to know what a legitimate short-term debt is on their books from their legitimate activities or what a fraudulent debt is from their counterfeiting activities. But by using a legitimate function to hide their scheme, they can achieve the legal results, selling shares which they don't have and never intend to deliver. Citadel's activities also pose an extreme cost to the system. Fraudulent shares circulating in the marketplace means that investors may become unsure that their shares are legitimate, or investors may become unsure that the price of the stock is a reflection of legitimate supply and demand. So this is changing our trust in everything. Remember contract for differencing and the scandal with Robinhood? That is just a tip of the iceberg for hurting the American people's trust and the worldwide people's trust of the financial markets. How can they get away with this? Well, if you don't want them to get away with this, make sure that you check out this video over there with Ro Khanna, my congressman from Silicon Valley, and how he has now listened to both me and A. Tobit, the person that wrote the Citadel Has No Clothes, the Everything Short, and the Walking Like a Duck, Talking Like a Duck. The two of us co-host this interview with Congressman Ro Khanna. If you guys haven't checked out that video yet, it is a good one, just 20 minutes long, about exactly how the first congressman has been warned about a financial crisis worse than the 2008 crash. If you guys like this video, please consider supporting the show by pressing the join button down below and coming on the live stream, sending a super chat, and talking with me. The most important piece is that you continue being you, because I like you just the way you are. The Mr. Rogers of Stocks is signing off, but I appreciate you, and I hope to see you in the money. Peace. Cool. Did you guys like that video? Okay, Harry Gusto says, update from yesterday, body language guy will do it, guys. He also needs help finding the hotspot in video. We'll be posting DM in AMC Reddit. Harry Gusto, tell the body language guy that if he wants to come on this show and plug his channel and everything else and talk about this, that he is more than welcome to. I want him to message me at andrewmobusiness@gmail.com. Heck yeah. And then General Electric for Catherine Wincheck. Heck yeah. Let's do it real quick and then come back to our boys. GME and AMC. So General Electric. Thank you guys for bearing with us. What is going on? How's everybody doing? Let me just go through some of the questions you guys have here. Hector is a beast. Hector is bestest ape roommate. Yes. He's right there. Hold on, I'm gonna hold my fist out. He's coming. Boom! Okay, let's see. Here you go. Oh. Let's look at General Electric. What if squeezes at noon? You mean today during power hour? Or do you mean noon as in like 30 minutes from now on the East Coast? There's so many noons out here. You on Discord, use the link in the video description. So, and message me. So we have Chris B showing up to the Mo Goals live stream. If you guys have not yet subscribed there, I am going to be streaming Power Hour and my analysis of the markets there on the second channel. So actually, let's put that pinned in the. Let's pin that in the chat. We'll also have our very first inaugural Mo Goals, Andrew Mo Goals, talking to a member of the community just like you. And Chris specifically here is trying to start a fund for his daughter. So as of right now, this is what you guys voted for. Go check out that, that during Power Hour. Tard Stock. Please pass the same to Austin and Trey's family. Good health and God's will to you. Let's see. Andrew, I hope being a new Gorilla member will help me find you. I am just a silverback trying to give back to life. Thank you, Andrew. Your parents must be proud. Thank you. That really means so much. I love reading a comment like that. That's amazing. Luke says, gotta switch to AT&T Business. Okay, I'm thinking about it. Did you hear that?
Yes.
We might switch to AT&T Business today.
Okay.
or at the very least this weekend. We're thinking about it. Dude, that noon response is legit. So GE is up barely anything today after a weird spike up to 1384. That's still only like 40 cents. So General Electric has been trading sideways for a good amount of time here. Let's actually use our brand new trading tool. If you guys have not yet signed on to cheat code Algo, there's a link in the description below. We are actually exclusively receiving cheat code Algo on this channel only. So if you guys wanted to use that, that is in the description. It's the very first link that says my choice, all my choice. Let's just call this all my choice. Code Algo, all my choice for TA. This is all my choice. Tiblio. This is all my choice for options. Thoughts on Wanda dumping? Yeah, let's check out Wanda 2 in just a second. So if we look at GE, let's see how good our tool is at predicting rips. So one of the first things that you'll notice here is that there, let's actually go out and see if there's a major sell. So this sell would have netted you a, it would have prevented you from seeing a 1350. So I'm looking at this little red indicator here. This is the sell indicator here, and then we have the CC swing, the swing indicator here. So it is indicating that there is going to be a bearish swing downward, and so these two indicators connected together would have given you the prediction to sell. This was back on the 8th. So that was only yesterday. Was today the 8th? Yeah, that was yesterday. So we are looking at this to save you from 1350 down to 1310, 40-cent dip, and then there's that buy right after that that sell indicator. So this makes it super simple. You don't need to have a degree to actually understand this, right? So this basically boils down everything for you. Let's see another another historical like buy right here, right? You usually want to look at multiple indicators here. So that buy connected with this swing indicator here would have been a great option for you to jump in at around $12, and then you would have gone and to ride this wave all the way through. One of the other things is that you might notice that there's sell indicators and buy indicators on the way up. So if you really wanted to scalp, you could. However, normally you would want to see a third indicator either jumping in here with these two clouds. They're very similar to Bollinger clouds. However, they are specifically for oversold and overbought. And so this would have been passing through this green cloud here. And there are three indicators, one after another, right? One to indicate that the swing is about to happen down here. One to indicate that the squeeze indicator here is also green. One that we are in this Bollinger cloud to be able to bring you upwards, right? Slightly different calculated than the Bollinger cloud. So these four stars would have aligned to have you initiate that buy action here. So GE was a good buy a couple of days ago. Right now, where are we? So we have sell icon, a sell indicator here when GE would bounce up that random spiral upwards to 1389. Right now, we see one sell indicator with a CC swing indicator. So that's 2 out of 4, right? The stars have not really aligned for a strong sell. However, that's 2 out of 4. There is right now seeming like a consolidation likely to come. For now, I'm imagining that there's either going to be a consolidation or a strong continuation of this correction. Because one of the things that you will notice on the hourly chart here is that this probably scared a couple of people to paper hand from 1380, right? GE probably has a good amount of normal, like, fundamentals, brick and mortar, meat and potatoes investors. So when it jumped up this high too quickly, 1380 was a dangerous moment for GE. However, the VWAP actually went along with it. So the VWAP shows its true price trending directly above the price that it is currently at. I'm imagining that you have not a great entry point, but if you are just holding tight and waiting for it to recontest the VWAP, that's not a bad position to be in either. Let's look at Wanda. Wanda. What is the ticker for Wanda? Casey Studer says thank you. Oh, thank you, man. Akatsuki Tigers 69 so fine says 420 and 69 are going to be days that are going to make people rich if they pay attention to Elon's tweets and interviews. Elon knew where it was at. Once again, if you guys are confused about what that means, 420 is the day leading up to the share recall, so make sure to call your brokers. And 69 is the annual meeting for the GME like shareholders meeting. You can't make this up, and that's where Ryan Cohen is going to become the next board chairperson of the board of directors. What's going on here? Round Lake says you're promoting TradingView plus cheat code Algo. Tell us more about this setup. Yeah, this is based on more. This is based on simpler to understand 4 apes, 4 indicators maximum, right? You're looking at this buy sell indicator with these little B's and these little S's. You're looking at some overbought and oversold indicators with these alternate Bollinger Bands. They're not quite the same as Bollinger Bands here. And we have the squeeze indicator, very similar to the other squeeze indicators that you might see, such as looking at the MACD. And we finally have the swing indicator here, which is very similar to that RSI indicator. So this is just 4 more indicators that give you like clear enough understandings without having to understand slopes of MACD and how quickly that divergence is from the signal line. There's a lot of nuance when it comes to technical analysis. This just is a cheat code. If you guys are curious for a brand new tool, that's the one that I have just started to work with, an exclusive partnership with them. Very cool. Let me turn this into this. There we go. There we go. Incognito 316 says, let's look at XRP. XRP, oh, forming that pretty 3-day cup and handle right here. I don't think cup and handles can exist in a 3-day, but this is one making me feel like this is just an M double top here. That is likely, I think I warned you guys about the XRP double top here. So we see 1, 2, 3, 4, 5, 6, 7 wave. The 7th wave is very close to the 5th wave of impulse. And now we saw a small correction that is actually creating this beautiful little cup with a small handle staying above the second half. I am wary that this is going to rip because cup and handles are bullish indicators because it can easily be confused for a double top instead. So as of right now, I am going to say that XRP likely has more of a chance that this is a double top, which is a bearish indicator, than a bullish one, because if it does go, and right now you can just watch it, right? If it does go below the bottom of this cup, you know that this is a double top. This is a bearish indicator. If this then starts to resurge past the right lip, then that is a sign of a cup and handle instead. So there's really just about a 6-cent difference either direction. So wait for that indication. GME seeing a massive corrective wave. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 does not seem like enough for GME. Just touching that 30 down below. And let's make sure that let's look at cheat code to see if they have some thoughts about where GME is going. So we have a sell indicator here at before all of the correction. So let's look at if this sell indicator would have been a correct one. No. No, cheat code algo is having a hard time deciphering exactly when would have been a strong point to sell. Maybe here. And this is only 2 out of 4 indicators here. So as of right now, there are no strong buy indicators. Let's look at this. This is a buy indicator. It is also in a position within the Bollinger Cloud here. And then this was an indicator for the squeeze, and this is an indicator for the swing. So this is actually 4 out of 4 right here. But if you did buy in at this resistance at 165, you would have now started to continue trading at 165. So even Chico Algo is having a hard time deciphering exactly what to make heads or tails of GME right now. BIGZ is nasty. Uh-oh. Okay, let's look at BIGZ. BlackRock Innovation. Anytime I hear BlackRock, I'm suddenly perplexed. Oh, so there's no data before the 26th. It has gone from the 26th, $20 to 22. So that's only a 10% increase over a course of like 2 weeks. However, it's just steady growth non-stop. One of the things you'll notice first is that it's been above the 70 RSI this entire time. That is a terrible indicator for its overall momentum because it is currently looking very overbought and has been overbought for days. This is actually the most I've seen a stock push past 70 RSI and stay there for an extended period of time. So as of right now, you can't even really call this a runaway because it only has gone up 10% over a couple of days. I don't see any strong reversals coming other than the RSI staying so far above 70 that it is precarious every single day that it exists. So as of right now, I would be extremely careful. I would say that if you're looking for a price point underneath, that this 21 might be interesting because it did see a flash rip to 21 at pre-market on the 30th. And then it had a little bit of trouble pushing past 21 the next few days. So this might be an interesting level of support or resistance in the future. If you're worried that this is going to start a correction soon, it should be supported by this 21 here, although there's just not a lot of data to play around with right now. MRTX.V, you are next. MR. What happened? Oh, there it is. Can you confirm this is the right stock?
There's a test. I don't know if it's.
Oh,
it's not over there.
Banana oatmeal. No, is this banana with granola?
Chia seeds and granola.
Ooh,
Super healthy.
Super healthy. Well, let me see if there's a sound. If there's a, I'm just gonna turn off my mic real quick to see if there's music in this clip. There is music in this clip, so I would want to be able to show it, but I'm not sure about the music. Why rocket no boom boom after catalysts? That's a good point. So let's actually take a look at that. This clip was from a while ago, I think. Hold on.
Financial future, and Wall Street hates this.
Why is this clip so loud? Oh, this is a really cool logo. Diamond Fist by user Woke Orthodox. Use if you want. I do want. That's a really cool fist. Oh boy, okay, so we are going to see a couple more pieces of DD from our Super Stonk, and then we're going to go to our GME real quick. It's incredible this is not ringing bells at SEC. Elon had it right. We're going to go back to ticker symbol suggestions again if you guys have them. MTRX. Okay, got it. MTRX. This is it. Matrix. Got it. Matrix service. You are up next. So I'm going to use the little astronauts room real quick. But while I'm gone, take a good look at Meatball. And I will be back momentarily. Actually, you know what would be fun? Is that if I get to play Lo-Fi and you get to look at Meatball at the same time. Let's see if I can do that. Hold on. Okay. Oh boy. I am not sure if that worked. And that music, that song was not very good. That song was not great. So hold on, how do I get rid of this thing? Boom. I need to go recurate my songs. Okay, so okay, so Matrix is on deck. And then we're going to talk about Annabelle Pickering. Oh, Moneyball, Moneyball, Moneyball. Did you try to do Moneyball? You have to do a space in between. All right, so Matrix is on deck, and then I think a couple of you had also had questions before. GME for sale right now. It says Samp V2. Aw, Candace Chen, they liked the song. They liked it though, says Christopher Katsef. That one was chill, says Tony. Okay, I'm glad. I'm glad we have the same music taste then. I'm looking at the wrong video here. Let's see. Let's see Elon say he does not respect the SEC. This is a cool clip. Whoop, hold on a second. Wait a second. There we go. Let's see Elon say he does not respect the SEC.
Look at you. No, I want to be clear. I do not respect the SEC. I do not respect them.
But you're abiding by the settlement, aren't you?
Because I respect the justice system.
Ooh, I do not respect the SEC. I don't respect them. Uh-oh, I can't play that clip for sure. I don't think I can play that clip. Good. Okay, Matt Kors was reinstated yesterday. That was a big part of yesterday's story. Let's see. Once again, no deep in the money calls. Yes, that was from yesterday. So at this point, it's just like, is there deep in the money calls? No. Well, it doesn't really matter then, does it? Why rocket no boom boom after catalysts? Calm down, the whales are watching. So let's actually look at some data here. So you guys are probably wondering exactly why is there no like upwards pressure, even though GameStop seems to have just naturally bounced off of 165. But why is there no upwards pressure after a significant amount of positive news? Well, let's find out. Let's see. Love you, Moon Platoon says Wook Hook. I love Wook Hook. That's a good name. The answer is simple. Our institutional holders didn't want to launch quite yet. Face it, even if retail owns the entire flow, we can't generate the kind of trading volume needed to launch this rocket. We're hodling, but we're not mission control. We don't get to push the big red button. Why? Because we simply can't generate the volume. It's kind of good. Of the last 60 days of trading, we've had 29 days in the green, 31 days in the red. Of those 60 days, only 9 of them had a volume of under 10 million. Of the 9 days, 6 occurred over the last 7 trading days. Volume is lower than my wife's standards. I think only 9 of them had a volume over 10 million is what they meant to say. We've been having volume under 10 million every day. Volume distribution from January 12th to February 8th. Oh, so it is under 10 million. So only 9 days of under 10 million, 12 days 10 to 20, 5 days to squeeze, where we had over 100 million. Negative days versus positive days. Over 100 million, right? That's the positive day, obviously. 50 to 100, right? And under 10 million, we have negative days. This is why people want to see that positive pressure. Harry Gusto, thank you for the update. Hey Andrew, some FUD for AMC reported today that Wanda sold 15 million. Not true. As of today, they bought 15 million more. Thank you for that update. Insider sells AMC shares. Shares of AMC Entertainment Inc. fell by 2% today. Wanda filed a blah 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 form that insiders sold 2 million shares. at 15, then 1.5 million shares at 14. That's 3.5 million shares. And then another 12 million. So that's the 15 million right there. So someone inside Wanda, well, once again, it seems like we are already seeing that story get debunked. This is from 30 minutes ago. So that's that story there. Raimundo Verde, can you post the link, or mods, can you help Raimundo post the link of where it says that that FUD story is not true? Matrix, gotcha, Brayden. I'm on it. Chad Skinner says AMC tweeted Trey about connecting with his channel. Yeah, I saw that too. Super excited. He updated the Hodlman yesterday because he was so proud. It was very cool. Cannot wait to see that interview. Jeez. Zhao Long just said, bought another 5 shares in my IRA. Let's go, baby. Okay. Matrix. Is this the right matrix? Just making sure. Oh, Matrix V. MTR X.V. Okay, do you see my 2 options here? I'm afraid I don't know if I can actually look at your matrix stock. It's either matrix service or loop insights. Oh, loop insights. Oh, gotcha. Okay, cool. In that case, so we have, this is the 30-minute chart. So loop insights off a high of 290 back in December. So now trending up on the last 2 days from $1.39 all the way to $1.86 at its height, so that's about 50 cents. You're probably expecting, you're probably wondering exactly where it's going to face some trouble later on. Here's the risk right there, right? Either this or this. There's a small channel where it was bouncing in between, and these 2 channels here are likely going to be where Loop Insights is going to be continuing to battle. Now that said, where is it going in the near future? This is, I'm afraid, a runaway stock in the short term. If it does recontest this resistance here, and that's a resistance that was back in January, is a little fuzzy. So I would say that as of right now, your biggest risk is this descending level of resistance from the past few months, right? It hit this February, and then in March it tried to hit it again, but it did not get to its February heights. So as of right now, that's exactly why it is staying here, because this was a level of resistance. So if you are trying to make this stock try to rise above $100.70, this is why it is having trouble here. So I would say right now it's not a strong entry point for Matrix. Neither is it a good idea to be able to jump in while it's trying to catch a falling knife. I would say a much more safe entry point is between these 2 levels of resistance and support here. First time commenter, awesome show. What's up, Jonathan Craig? Thank you for commenting. I appreciate that. Let me see what I got. Oh, you know what? Andrew Mochi tried to get an interview with the man himself. Let's do it, guys. The problem is that AMC, much more difficult. Sorry, not AMC. Ryan Cohen can't speak. So I need to maybe check out the GME CEO instead. George Sherman. So George Sherman Twitter, does he have one? Yeah, it's Geo Sherman. No, wait, no, that's not right. George Sherman GME Twitter. Here it is. GameStop Chief. Yep, that's George Sherman. That looks like his, 64 followers. That looks right. Maybe he doesn't have a Twitter. George Sherman, GameStop CEO. Nope. Okay. Well, want. Maybe I should just tweet at GameStop themselves. So what I'm gonna do here is I'm gonna look at Adam Aaron's tweet. Adam Aaron, CEO Adam Aaron. Oh, that's cool. Wow, that's a really. I'm gonna follow that guy. And then he says, Trades would be delighted to engage with you and your subscribers since you and so many of them are AMC shareholders. After all, our shareholders are the owners of the company, which means, of course, I work for all of you. A bunch of spaces. Adam Aaron, .. CEO, .. AMC Entertainment. What is this, this ending here? That's fine. So I'm going to quote tweet. And I'm going to compose this right here. And then actually it's time to go talk to, let's see if we can get Elizabeth Warren and AOC after Ro Khanna was willing to come on the show here. Let's see. So I would say, hey, Ryan Cohen, I know you are Congrats, by the way. But I hope someone from at GameStop is willing to support. I'm back. Hold on. I'm back. I hope someone from GameStop is willing to recognize the 100K daily viewers that jump on and learn, then support GME every day. Any chance we can talk to George Sherman or yourself on the show? We've had... Uh-oh, I'm running out of... okay, how about this? Someone from GME is willing to jump on the show and recognize the 100,000 daily viewers that jump on and support GME every day. We already said daily viewers that support GME. Balak Niak says, I had me scared, scenario streaming through my ring called Noodle. Glad to see you're safe. You are safe? Safe word. Supercalifragilist. P.S. Your interview with Congressman Ro Khanna, A+++. Thank you. I appreciate that. And thank you for supporting the show by pressing that join button down below. I appreciate that. Okay, I'm just trying to tweet up a storm right now so that we can get Elon on the show or something like that. We can get Elon, maybe Ryan Cohen. So we've had Ro Khanna. Can I do Ro Khanna and Dr. Pippa? Let's get George Sherman or yourself. Or you. You. Perfect. This is exactly the length of the tweet that I have. So let's tweet it. So, did that work? Hey, Ryan Cohen. I know you're busy prepping to be chair. Congrats, by the way. But I hope someone from GameStop is willing to jump on the show, recognize the 100K daily viewers that jump on, and support GME. We've had Ro Khanna and Dr. Pippa on the show, and let's get George Sherman or you. Great. There's that tweet. And then Elizabeth Warren, I'm imagining it's just going to be the exact same thing. So let's space these out. Let's not write too many tweets, but this is likely going to be the similar tweet for Elizabeth Warren or AOC or Bernie. Bernie, please. Bernie, my boy. So go ahead. If you guys haven't followed me yet on Andrew Mo Money at Twitter or Instagram, it's a good chance to. We're making moves. We're talking to people. Okay, we saw this FUD article about how people don't care about GME anymore. I laugh. Why no boom after Catalyst? We saw this already. Is it sinking in yet? There might be 10 million of us out there holding tight. We're not the only ones driving the volume needed to take us to the moon. So that is that. If the SEC or the DTC screws us, I'm never buying an American share again. I implore you to join me in solidarity. 15,000 upvotes. I'll give one as well. We're only going to be buying like Volkswagen for the second squeeze. Or Toshiba. So let me go and check out our GME to see if there's anything to cover today. Oh, I missed and. Oh no, I missed and. Oh, this is why I'm not a good tweeter. So we have 100,000. We have 100,000. This is actually a very interesting number, 100,000 daily viewers, because there's 60%. I have the weirdest ratio. I guess it's because you guys respond well to being asked to subscribe. Because I have a 60% to 30% subscribe to an unsubscribe ratio. That 30% of the people still come to watch me on a daily basis, so I still have 100,000 people on a regular basis every day. So 75% of you are subscribed, and I appreciate that. Let's get it up to 100%. I appreciate that. Let's see.